So you have decided that you want to plunge yourself into the world of stock market. But before you do that, if you may be asking yourself these billion-dollar questions, that is, should I become a stock trader or stock investor? Which one is better? If this is you, then you have landed at the right place. In this episode, I shall dissect the pros and cons of each and what are the most important skills you must possess should you choose to become either one of them. So make sure you watch this video till the end. The questions of whether stock trading or stock investing is better depend largely on your financial goals, risk tolerance, and time commitment, and the level of expertise. Both strategies have their pros and cons, and the best option really comes down to your personal preferences and objectives. Let me break it down for you on both approaches in terms of its pros and cons and what important skill is needed for each. So, stock trading, what is it? Stock trading refers to the practice of buying and selling stock frequently over a short period. It could be a matter of days, weeks, or some even minutes, which is known as the scalp trader. Trader typically relies on technical analysis, charts, and market trends to make quick decisions. And the key features of stock trading are it is short-term focused. Traders seek to profit from short-term price movement, and it involves infrequent transactions. High trading activities potentially leading to higher transaction costs too. So you will need to trade from a platform which offers you super low brokerage charges. What about its risk and reward? The potential for both high rewards and high losses due to short-term market volatility. And it is time intensive. It requires constant monitoring of the stock market and quick decision making. What about the skill and knowledge that is required? Successful trading often requires understanding the market patterns, indicators, and a deep grasp of the technical analysis. For myself, I have learned technical reading skills from various sources, spending more than RM50K into the course fees over the years and spending tons of hours looking through charts every day before I eventually get to master this skill. This skill is definitely not for the faint-hearted. You must have deep desire and passion in mastering it. And the size of each trade must not exceed 5 to 10% of your total portfolio as a good risk management strategy. And if you choose to do stock trading, there are 3 pros which I want you to know. The first one is high potential returns. Traders can capitalize on quick price movements and market inefficiencies. Second is the flexibility. Trading allows you to adjust your position rapidly based on the changing market conditions. And third, active participation. For those who enjoy a fast-paced, hands-on approach to the market, trading can be exciting and rewarding. What about the cons? There are 4 cons you must be aware of when doing stock trading. The first one is high risk. Short-term market swings can result in significant losses, which is why all stock traders' number 1 rule is to put a stop loss on each of their trades. During bear or choppy market, most traders would find their trades being hit with stop loss most of the time and resulted in loss, though limited. Second, it can get quite stressful. The fast-paced nature of trading can be mentally exhausting and stressful. And the third, which is the fees and costs. Frequent trading transactions can incur high trading commissions and fees, which could reduce the overall profitability. Which is why it is important to choose a brokerage firm which offers a low platform fees. Like for myself, I am currently using Mumu and Vibu. And it requires expertise. Trading is definitely not for beginners without significant time invested in learning and practice. Now we have come to stock investing. So what is stock investing? Stock investing is the practice of buying and holding onto a stocks over a long term, typically with the goals of gaining capital appreciation, dividends, or both. Investors often focus on the fundamentals of a company such as its earnings, management, growth potentials, and its competitive moats. So knowing how to compute or find out a company's or stock intrinsic values become imperative if you want to become a great stock investor. One of the prominent stock investors is none other than Warren Buffett. He is well known for holding on to stock for a lifetime, if not for many, many years. So what are the key features of stock investing? Stock investing is mostly long-term focused. Investors typically hold stock for years and sometimes decades. And second, it requires fundamental analysis. Investors analyze a company's financial health, industry position, and growth prospect before deciding if this stock is worth investing into. And third, lower transaction volume. Since investors tend to hold their trades for long term, which resulted in fewer trades, which also means lower transaction costs overall. And the compound growth effect. Over time, investment can grow through price appreciations and reinvested dividends. What about the size of trade? For an investor, the size of trade can be bigger since we are investing into profitable company with great fundamental and often trading at a discount, which offers us a good margin of safety. What about the pros of stock investing? There are 4 pros which I could think of for stock investing, which I want you to know. The first is, of course, lower stress. Long-term investing generally requires less active monitoring compared to trading, which resulted in lower stress level. And second, compounding. Investment tends to grow over time, especially so if dividends are also reinvested into it. And third, lower cost. Fewer transactions leads to lower trading fees. And last but not least, less risk. Historically, stock markets tends to increase in value over long periods despite short-term volatility, which reduces the likelihood of significant loss for long-term investors. What about the cons? There are 3 cons you must know if you choose to do stock investing. The first one, slower returns. The potential for returns is generally slower compared to trading, especially in the short term. Second, patience is required. Investing requires holding onto a stock for years, which can be difficult when the markets are volatile. And third, market risk. Long-term investors are still exposed to market downturns, though they have time to recover. This is also why it is important for us to only invest using money which we don't have use for it, at least in the medium to long term. So, which one is better for you? Stock trading might be better if you enjoy active participation in the market and have time to monitor the stock closely. You are also comfortable with the risk of losing money quickly and can manage your stress well. You have the technical analysis skills and understand how to interpret charts and market signals. And you are looking for short-term gains and are prepared to handle the market volatility that comes with it. On the other hand, stock investing might be better for you if you prefer a more passive, long-term approach with less frequent trading. On top of that, you are patient and are looking to build wealth over time with less emphasis on the day-to-day market fluctuations. And finally, you have a long-term financial horizon and can ride out the market volatility. And you also want to take advantage of compounding returns effects and minimize the transaction fee. So, what are my final thoughts on this topic? My final thoughts are trading can offer quick profits but comes with higher risk and demands active involvement, making it more suitable to people who are knowledgeable, experienced, and can handle the day-to-day trading stress. On the other hand, investing tends to be a safer, steadier way to build wealth over time. It's better for people who don't want to spend all their time watching the market and are more interested in the long-term growth of the stock or company. Ultimately, the best approach still depends on your individual financial goals, lifestyle, and risk tolerance. Many people choose to combine both strategies, that is, trading with a portion of their portfolio while investing for the long term with the rest of their portfolio. This is me. I allocated a small portion of my total capital to do stock trading based on technical analysis, and the bulk of my capital I invested it into stock with good fundamentals and trading at a discount to their intrinsic value, mostly stocks listed on the US market. But even with my trading portfolio, the stock which I choose to trade must also pass the fundamental test. This is important, especially when we are trading in a choppy market when the probability of technical chart patterns tend to fail more. This way, should the chart pattern fail on me, I could still continue to hold on to the stock with good fundamental and choose to add or just continue holding on until there is a rebound when the general market sentiments improve. This is the end of my sharing for this episode. If you like the content of this video, do smash onto the like button below to let me know. So long, and I shall see you again in my next video. Ciao!